What's up guys, my name is Mike and I am a software engineer. I do forex trading, I do machine learning, and if you're new to this channel, please subscribe down below. If you like those topics, believe me, you won't regret it. We are going to do a lot of cool stuff in here. And anyway, the topic for today's video are the technical indicators, the trading technical indicators. So basically, what is the technical indicator, what are the types of those indicators, and how people use them to make better decisions on the market, and how machine learning algorithms can use them as well. Okay, so let's get started. So guys, what is technical indicator? According to the internet, a technical indicator is a mathematical calculation that can be applied to a stock market past patterns like price, volume, or even to another technical indicator. So basically a technical indicator is just a function in a code that makes calculation based on previous prices to give you some kind of insights of the market. And just to make it sure, technical indicators, they do not analyze any kind of fundamental data like the quarter earnings, non-farm payrolls, or the whole economic situation. They just apply mathematical functions to the past prices to get any kind of insights. And you can use them in many ways. You can use them to predict the next prices. You can use them to define the trend of the market, so if the market is gonna go up or down, and you can use them also for a confirmation. So if you want to take a trade, you can use a technical indicator to confirm that this is the right decision. Okay guys, so what are the categories of the technical indicators? We got four. The first type is the trending indicator type. So basically this type measures the strength and the direction of a trend using some form of price averaging. So basically we are taking the previous prices, we make a lot of kinds of different averages between those prices and periods to establish a trend. So for example, we got the moving average, right? So if the price will go above the moving average, it will indicate that the trend is up. And if the price will go below the moving average, it will indicate the opposite, so the trend is down. So price above moving average, it's the bullish trend, and the price below the average is the bearish trend. I hope this makes sense for you. And the examples of this indicator, we got the, as I said before, moving averages. We got also the MACD indicator. In a professional way, it's called the moving average convergence divergence. And we also got, for example, the parabolic stop and reverse indicator, so-called parabolic SAR. People use it to find the potential reversals of the market direction. Okay guys, the type number two. The type number two is called the momentum indicators. So what's the difference? So basically the momentum indicators help identify the speed of price movements by comparing prices over time. It can be also used to analyze the volume of the market. So basically it's calculating by comparing the current closing price to the previous closing price. We do not take all of those previous prices like in the trend indicators to make our calculations, but we take only the current closing price and the last closing price to calculate the difference between both of them. Basically that kind of indicators appears on your chart like in a form of the oscillators that oscillates the price momentum changes. And also when there is a divergence between the price and momentum indicator, it can signal a change in the future prices. So guys, what are the types of the momentum indicators? The first one and the most popular one, I think, is the stochastic, CCI, so-called Commodity Channel Index, and also a famous one, the RSI, Relative Strength Index, which measures the strength of the asset, stock, forex price, forex pair. Okay guys, the type number three is the volatile indicator. So the volatile indicators measure the rate of price movement regardless of the direction. This is generally based on a change in the highest and the lowest historical prices. They provide a very useful information about the range of buying and selling that take place in a given market, so for example in a stock market, forex market. which can help traders to identify the highest and the lowest point of the market, the so-called turning points. So basically this indicator is perfect for the range trading. And guys, what are the types of those kind of indicators? First of all, also a very popular indicator, the Bollinger Bands. So basically the Bollinger Bands are used to measure the potential highest and the lowest point of the price. So it's some kind of the channel, and the price goes inside this channel. We got also the average true range and the standard deviation of the price. Okay guys, the last type of the technical indicators is the volume indicators. So those type of indicators, they basically measure the strength of the trend to confirm the trading direction based on some form of averaging or smoothing the trading volume. So basically it's not being calculated like the trending indicators from the prices, from the previous prices, but it's being calculated from the volume. So basically from the order book. If you do not know what is order book, just Google it, it's really worth to know. So basically the strongest movements in the market in the trending direction usually happens when there is a volume increase. In fact, the increase in the trading activity can lead to the large movement in price. Okay, what are the types of those indicators? First of all, we got the check-in oscillator. I hope I spelled this one correct. We got also the famous one, unbalanced volume indicator. We got the volume rate of change and many more. So guys, we talked about four types of indicators: trending, momentum, volatility and volume. So in conclusion, trending indicators are used to predict the trend of the price. The momentum indicators indicate the short-term momentum of the price movement. The volatility indicators calculate the potential changes of the price in a short period of time. So basically if the return of the price will be really small or we will have the large price movements in a short period of time. And we got the volume indicators, which are basically the confirmation of the trend direction, that are calculated not from the prices but from the volume of the orders. I hope all of this stuff makes sense for you. So if we are going to use those indicators in order to make some machine learning models, you can use it as input features. So basically, let's assume we will get rid from all of our prices and we'll put only the technical indicators into our machine learning model, deep learning network for example, and let's make this model train. And let's find out if the model is gonna learn something, some patterns from this data to predict the direction of the market. Anyway guys, thank you for watching. And guys, I also have a question to you. So basically, lately I was thinking about making a series of videos based on technical indicators. So for example, I would make one video on RSI, one on stochastic, one on Bollinger Bands, and in each video I will explain deeply what is this technical indicators, how it's being calculated. We will calculate this indicator in Python and we will apply it to the real prices. So basically it will be something like making of those indicators from scratch. Let me know in the comments if you would like to get that kind of videos uploaded to my channel. Anyway, one more time, thank you for watching. If you like the content, subscribe to this channel, hit the like button, comment with your ideas about new videos. I really appreciate it and I will reply to every single comment that appears under this channel, under this video. If you want more stuff from me, you can also go to my blog page, the link is down below. I upload additional stuff on my blog, which is not available on YouTube, so if you want to get more, just go to my blog page. And anyway, one more time, thank you for watching and see you soon in the next video.